Welcome back to the Ramp Up to Retirement podcast with your host, Dan Reese. Dan, good to see you.
Yeah, good to see you as well.
We are in the middle of a really interesting series about selling your business. It's an 8-part series for those of you who may be joining us in the middle. We're on part 3. Don't fear, you do not need to go back and listen to the others to understand what's going on in this one. But when we're done, you may want to go back and listen to the whole series if you haven't already, because today's is about what's your number. And Dan's done a really good job in terms of looking at the process of selling a business and breaking it down in nice, clean, orderly, organized steps. Really important. And Dan, this one is what's your number? What does that mean?
Yeah, I mean, and we talked so just to give a quick recap on the other first 2 in the series. So the first one was really kind of an overview of why exit planning, which is what we're kind of talking about, is really about value acceleration, making your business as valuable as possible so that you can exit, and making it easy to get out of, meaning that you're ready, the business is ready, all those things. So we kind of covered that. And then in episode 2, we talked a little bit about the personal leg, which was all about, okay, sometimes businesses can define you, as you're, especially, family-owned businesses, that's almost who you are. And so that idea of personal planning is really, what's the next thing look like, right? How do I continue to have a fulfilling life if I'm not running this business any longer, right?
Right.
So today we're going to get into money, right? So what's your number? So a lot of it is, this is an area that really is so important. Because really, if you want to think about this, we talk about a 3-legged stool: business planning, personal planning, and then personal financial planning in this area. So this really gets into personal financial planning, right? So we talk about your number is that, really understanding, okay, take an inventory, what are my needs, if I sell this business, what do I need to continue living the lifestyle I'm used to? What do I have outside of the business, right?
Yeah.
And then figuring out where that gap lies, which we'll get into today. But really, it's interesting to understand your number, because you can't really move forward, because there'd be nothing worse than selling a business because you could, and then finding out, oh boy, I sold that business and now I don't have nearly enough money to continue living like I'm used to living.
Help us along with this, because I do know several small business owners. And when I've talked to them, and I'm not going to get up all in their business, obviously, but I get a sense from them that they have some sort of plan kind of in place, or they've got an idea of what they want to do. But you have been really good at breaking this down into an orderly process. So, I mean, is there a formula for knowing, like when, for example, to sell your business?
Yeah, I mean, first and foremost, I think it's interesting because sometimes business owners will tend to confuse valuation with readiness, as an example. So when you think about readiness, so when we get into this formula, it is all formulaic in many ways. So we have ways to measure, number one, how ready are you personally, and how ready is the business for sale, right? So that's part of that formula. So just because you get a valuation where you're like, oh, that seems to be a lot of money, that's good, I'm ready. Well, they're different things, right? And the other thing is this idea, as we talk about a formula and how we do it, having liquidity, meaning somebody's willing to write you a check, doesn't necessarily mean that's financial independence. So what's financial independence? Really the ability to continue living the life you're used to,
Yeah.
right? When you have a change. So that change could be selling your business, retiring from a regular job, and things like that. And the third piece of it, which we talk about through this process, is, concentration risk, which we're going to talk about more, is often extreme. So what's concentration risk? Well, let's talk a simple example. Let's say, Bill, you've got a portfolio and 80% of it is in one stock. Most people would look at that and go, whoa, that's really risky. That's a lot of money in one stock, right?
Yep.
Especially if you look at it and go, I've got plenty of money, so why am I taking that risk, right? Maybe I get more money even, but the reality is you put yourself out to a lot of risk. Well, that's exactly what most business owners have, is anywhere from 70 to 90% of their wealth in their company, which is considered concentration risk, right? And so as we're working through this, knowing when in the formula, there's really a process that you have to go through. Again, getting to understanding readiness, business and yourself, understanding what do you need for financial independence, understanding how much concentration risk you currently have and, how that can affect that decision making. Because the more concentration risk you have, the more urgent it is to get your planning in order, right?
Yeah, well, I was just sitting here thinking, what do you do about that? I mean, if 80% of my wealth or my financial well-being is tied up in a business, I guess this hints at why financial planning is absolutely crucial at this point.
Yeah, and when we talk about the runway, right? So the longer your runway to exiting a business, the more options you have. And so that's kind of, as we talk through this concept and understanding how to do this personal financial planning, that's super important because the more concentrated you are, the more risk you have, right? The more risk you have means the more urgent it is to like get your house in order, right? Because, it's one of those things that your options can be fewer when you have more risk, right? So that's one of the things we want to talk about, that concentration risk as it comes to personal financial planning and how to address this stuff.
Well, yeah, also hinted in there, and you didn't say it, is that, you cannot wake up one morning and go, you know what, I'm done with this. I think it's time to sell the business, right?
No, there's no doubt. And that's really what we're talking about here is that good, we talked about when we opened it up, it's really value acceleration, the whole process. And so this is part of it, right? So that with this one leg of the stool, personal financial planning, it can change your life because what it does is number one, it oftentimes gets you along, it creates urgency to make sure that you are creating less concentration risk. That might mean more saving outside of your business, different ways you can do that. It also makes you alert to, hey, I need this much out of my business, so I need to do the things to make that happen, right? But it really is so valuable because at the end of the day, like I always tell people, like I have clients all the time that say, hey, just tell me what I need to do, I'll do it, right? But there's a lot of stress when you don't know what to do.
Yeah.
And so the personal financial planning opens up that kind of knowledge, right? For a family to say, okay, now I know what I need to do because, I see where I stand right now. I see the amount of concentration risk I have. I know what I need out of that business to continue my lifestyle. So you can see where we're going with this.
Oh, no, I totally can, because I was just sitting here thinking, oh, this is great because then this gives the business owner an idea of what they need. They may be thinking, I'm going to pull numbers out of a hat. They may be thinking, well, I need $10 million, but through the process of discovery and working on the financial planning side of it, they may realize actually what they need is 12.
Oh, yeah. Yeah. And we're going to get into some of that stuff because it's interesting. It's like what you sell, which we'll talk about later, what you sell a business for isn't what you get. Uncle Sam's always there, right? So we'll get into that stuff too.
Got a cousin, they got a relative always looking for it. Yeah.
I like that, a relative. Yeah.
So how do we know our number? Walk us through that.
Yeah. So this is what's great about this stuff. So personal financial planning, just because you own a business doesn't make that necessarily that different from someone who doesn't own a business, right? So like let's take a simple example. Let's say somebody's going to retire from their job at IBM. They've been there for years, right? And they know, hey, I got this pension, I've got my 401k, I have Social Security, maybe I've got a rental property, whatever it might be, right? So what's the first thing you do? You sit down and you figure out all the stuff you got, all the resources, if you will.
Mm-hmm.
And then you start looking at, okay, what do you need? And now this is where it does get a little bit trickier with the business owner. But typically, you think about, all right, let's see what we spend, a month or annually. Let's figure out how we're going to fill that in so we can maintain that spending and all those things. The challenge with the business owner, and I think we've talked about this in a prior episode, is sometimes we forget how much value we get out of our business outside of our paycheck.
Yeah, no, you have touched on that. Yes.
And so you've got to kind of be honest with yourself, and you have to look and say, am I getting a car? Is my insurance being paid for? My cell phone? Do I take some trips that are really personal, but we call them business? Like all those types of things, right? And so you start looking, and you'll often hear a business owner say, "Well, I really don't spend that much money," when they look at their personal side only. But when they reflect on what the benefits they actually get out of the business, healthcare, I mean, you can go on with many, many things that people receive benefits as business owners.
Yeah.
And they add that back in. That's personal financial planning, right? Because what we're trying to figure out, if this business doesn't exist anymore, if we sold it, what are all the things that we've got to continue to pay for to maintain our standard that we're used to?
Where's that money going to come from?
100%. And then, of course, once you identify that stuff, you also have to look at like what everybody has to look at. Inflation, things get more expensive every year. You've got to look at what's your comfort level with investments? How much risk are you willing to take? Because that's going to affect returns, right? And returns affect how much money you can spend.
And I would imagine, Dan, I would imagine that's a different number for somebody who's selling their business in their 50s versus somebody who is in their 70s and selling their business.
100%. The longer that you've got left to live, typically the more money you need. And I mean, that's pretty much that's the reality. And even to kind of another thing with that, the older you get, you tend to spend less because you don't go as much.
Mm-hmm.
So if you're going to sell your business and you're 50 years old or 55 years old, chances are you plan to lead a pretty active lifestyle. And, the more active you are, the more you're going to spend, right? And so that goes back to that personal financial planning, is understanding spending over time. And certified financial planners typically have pretty good experience around seeing how spending can change for families as they get older. And it's kind of a reality check for people that are maybe younger, like, well, I just want to get out. I'm not going to be that busy. And you're like, well, you probably are going to be busier than you think. So let's err on the side of, you're going to be more active. And if you're not, great, you'll have more money. But if, and maybe not great because you want to have a good life as well.
Oh, yeah.
You know what I mean? But the point is that we always want to err on the side of higher spending so that if that works, lower spending is going to work fine.
What happens, Dan, when you work with a client and they realize there's a really big gap, or not even a really big one? It's just there's a significant gap there. What do you do?
Yeah, and that's the best part. So what we're really trying to figure out, just to stay on the language that we like to use, you're talking about the value gap, right? So the value gap is very simple. I just want to lay this out. Once we realize what your true cost of living is, what you need to maintain your lifestyle, then it's pretty simple. We're going to look at what do you have in assets that you can use towards that outside of the business, right? And then basically the value gap is the total number you need less what you have outside of the business. So it's going to tell us what we need the business to be worth in order for you to be able to maintain your lifestyle if you sold it. So it's pretty straightforward, right?
Yeah.
Total need less what you have outside of the business equals what you need from the business.
That could be a hard check too. I think sometimes a hard check to a reality check, because I would imagine that in some cases you're going to find people suddenly dawning on them they're going to need to adjust their lifestyle.
Yes. So that value gap is so important to get that number, because what you can do then, number one, and we'll talk about this, getting your business value, which we've talked briefly about, but then, it's always, okay, now I know what I need. Now I need a decent business valuation to see where I stand today, right? And so one of the things that's so great about being a business owner and in planning in general is that you can make great improvements. I mean, you can substantially change your current reality. Now, what do we all need to do that? Time, right? We need time.
Yeah.
And so that's why this stuff, it's like always, don't wait till the last minute, because then your risk goes way up. Back to what we talked about, the longer your runway, it reduces risk because you have more time to deal with concentration risk and all these other issues we mentioned.
And that really goes to the heart of what this entire series is about, actually.
100%, right? So this time allows you to look at it, determine your business valuation, what's that difference? What's my value gap? And then what's my business worth? And is there a gap between those two? If my value gap, like you said, is 10 million, my business is worth 4, well, I got a problem, right? Because I'm not going to be able to maintain my standard of living. But with that long runway, what's so great about that is that now we can start implementing good value acceleration in general. We can start bringing in a true value accelerator into the business and start helping us improve that value, right? And there's lots of ways to do that. We can now start working on our own personal side to say, hey, we need to start making sure we're maybe cutting back some spending today, start saving some extra money so we can maybe build up some of that money outside of the business so that we can reduce what we need from the business to still maintain our lifestyle. We can also consider just changes in general to lifestyle, and saying, hey, what's most important to us? What are our greatest values? So that maybe we can shrink that value gap just because we could maybe live on less money than what we have been, right?
Yeah.
But time is your best friend because it allows you to really look at those things comprehensively and say, hey, maybe I can do a variety of these things and I can substantially close that gap. And it's shocking when you start really, moving in a direction. Like if you had, like people talk about all the time, when you write down a goal and you've got it out on paper, the progress you can make is amazing when it's top of mind.
So, Dan, this is where we got to talk about that relative who's standing by, because that's nice work and you've done all of that stuff. But I mean, at some point, you're going to have to realize I'm going to sell my business. I'm going to sell it for valuation X, but I'm going to owe some money to Uncle Sam.
Yeah.
And I'm going to get a Y. So how do we do that?
Yeah. I mean, it's huge. Like taxes have to be considered with everything. And, one of the things too, as you look through good exit planning, part of that whole value acceleration is looking at all the options to exit. Because I think people get caught up in, I can just sell it, right?
Yes.
Well, there's like ESOP plans, there's, family transition, there's all kinds of different things, partial equity sales, lots of things you can do. And they all have their own tax ramifications, right? And so understanding all the options that exist is part of it, right? And then when you understand those, then you can start putting the pen to paper and say, if we go this route, what's the tax consequence going to be, right? So like if you just sell a business outright and somebody writes you a check, let's take the simplest situation. Hey, you know what, Bill, you've got a business. I'm willing to pay you $10 million for. I'll write you a check. You're out tomorrow. I'm in. That's very rare, not likely, but let's just say that occurs.
For purposes of this conversation, let's say that happens. What's next?
Yeah, typically, if that's the thing that happens, you're likely going to have a lot of capital gains tax because most people's basis in their business isn't that high. So like what you sell it for versus your basis, you're going to likely have some capital gains tax, right? And when you have a liquidity event, the tough thing with that is it pushes all those rates up. You know what I mean? You can have, how the tax code is. You can get these other unique taxes thrown in because you surpass certain thresholds, right?
Right.
And so those numbers can increase. And so that's a reality.
Yeah, but Dan, isn't the capital gains tax rate less than the income tax rate?
Generally, yes. I mean, and that's an advantage because, it's just like when you sell a long-term stock you've owned and you've got, you have capital gains versus income tax rates, which definitely differ. But the truth is it's still a negative, right? It still takes away from the sale price, what you're actually going to get. And so that's the thing that we always encourage everyone to think through when you're thinking about exiting is, understanding having a good CPA on the team that can say, hey, if this happens this way, here's kind of the tax schedule. So I will give you like a break. Like I've got an accountant that does a great job with this. He did it for a client like 2 years ago, and it was awesome because he made it really easy to understand. Typically, most business sales a lot of them will have some earnout, meaning that you stay on and you've got to basically maintain the business's success.
Okay.
And they'll pay like a amount up front, and then you'll get an earnout year 1, year 2, year 3. And, there can be a lot of different ways they structure that. But what a good CPA will do is they will show you, hey, year 1, this is kind of your tax liability. Year 2, if you hit these numbers and lay it out for you, and they'll lay it out for you if you hit the earnout, if you don't, you know what I mean? All the different scenarios. And so going in before you say yes to the deal, you've got an excellent picture of what your net amount coming out will look like, right? Or close to it. And that's invaluable because it goes back to your value gap. Is it going to fill it? You know what I mean?
No, I do. I understand.
What might seem like a really good deal may not be for you because it doesn't allow you to continue your lifestyle, right? Which means, okay, I'm going to hang in there a little longer. I'm going to continue to try to make my business more valuable and do the things we're talking about in order to get where my after tax number fulfills my needs.
Listen to this. It sounds like a couple of things are really important. The first one is the value of financial planner and a good accountant should not be discounted. And the second thing is that the net is way more important than what that big headline number looks like.
Yeah. Yeah. And I think that's the thing is like I think because as business owners, and I am one, you get very busy with your day to day. And then, like you said earlier, I think you made a comment like, oh, I'm ready to sell my business. Let's get rid of it. Just not a great way to do it. Because the fact is, like, we're all these things we're talking about that take some time in order to really get you what you deserve to get out of that business you work so hard to build. But your team is so important, having a good CPA. And I will tell you too, there's expertise like in many different areas. So like a CPA that's great at your day to day may not be the best CPA. Who knows for helping you through an exit?
Yeah.
Maybe they are. You know what I mean? It just depends because there's different skill sets. Under having a good attorney to understand deal structure. There's so much that goes into this because it all goes together because there's many ways we're talking about, and we're not going to get into the detail of that, but that you can structure a business sale. They all have different taxes. And so understanding like with a good attorney, structuring the deal, a good accountant working side by side saying, here's the net outcome, a good financial planner to help you understand that's enough, like that's going to work for you. It all works together. The team is so important to make sure that you are making a good choice and that you're not doing something that you regret a year later. Like, what did I do?
Totally. You make complete sense because what you're really talking about in this particular episode is clarity, financial clarity, right?
Yep.
You know what you're going to get. You know what you need. You know what you're going to get, and you know how you're going to fill that gap if there, in fact, is any kind of gap at all, right?
Yeah, no, there's no question. I mean, it's like just to kind of recap a little bit. So, as you look through these things, when you're talking about personal financial planning, number one, calculate your personal needs, right? Which is a lot of work for a business owner because you have to figure out the benefits you're getting from the business. The personal stuff can be fairly straightforward, although I will say too many business owners, I've seen it a million times, they kind of, what I want to say, combine too many personal and business. So it can be more challenging to figure that out. But, that can be a challenge. Estimate after tax business proceeds. So important, right? That's like, as we recap these ideas, identify how much concentration risk you have. So if you have 90% of your wealth in the business versus 70, you have more risk and you better get to planning, right? You better get your butt moving because you want to make sure that you're reducing that as much as you can and really just understand that gap analysis. Like, what is it that you need? What do you need out of your business in order to continue your lifestyle? And then you can, like we said, then you can start making action plans. Then you can actually move forward. But it's funny. It's like going to your physical. Like, can you imagine going to your doctor and say, "Hey, I need to get treated"? You're like, "Well, what do you mean?" Well, I mean, I just want to make sure I'm healthy. Can you treat me? Can we let's do some blood work and like take vitals and let's
How about we evaluate where you are first?
yeah, let's see if you actually need any treatment, like but I laugh about it, but that's kind of the world we live in. Like you need to find out where you are before you can improve. Or if you even need to improve, you might be in a great spot already. You could be.
But then
Yeah.
then it's not a guess. Then it's not like a guess. Well, I'm pretty sure I'm pretty okay. It's not the same as I'm okay.
Yeah. I think the thing is, Bill, with a lot of this stuff, people don't do their estate planning because they, it's like, they don't like to think about it. And it's work. and you got to make decisions, and people would try to shy away from decisions. A lot of these things take work. There's no lie. Like, it takes work to get that clarity, but the reward is enormous because when you have that clarity and you know what to do, you can sigh, like, that sigh of relief, they call it, because you're like, hey, now I know, right?
That is very true. So for people who are listening to this episode, Dan, and who think some of the things you're saying make a little bit of sense to them, or maybe they've got a business that they're thinking about evaluating and maybe selling down the road, can they reach out to you and get a hold of you? Or
Absolutely. We've got a detailed process, and we've got other team members, other professionals that we can call on depending on what your situation is. But step one, honestly, is to get your personal financial plan started. You can start to understand where you sit, and you won't know it all. Like, everybody's like, well, I don't have all the information yet. That's okay. Like, you know what I mean? It's a journey. It's not like a sprint, it's a marathon. It's about getting together, reach out to us. We can sit down and just have an initial conversation and start brainstorming a little bit about where you're at, what you're thinking, help you get organized, so we can create a visual asset map of where you are today and start getting a better understanding of, what your needs are and where you sit so that you can begin to, like, okay, what is my next step? Well, I probably should get that business valuation. And there's a lot of companies out there. By the way, there's some really great companies that not only will give you a business valuation, but will actually get way more detailed than that and put you through a series of questions to help you understand your readiness. We talk a little bit about readiness. And so, like, all this stuff works together, but it's just starting, it's just like making that first call, in reaching out and saying, hey, I want to get started because I know this isn't going to happen overnight. And I want to make sure everything I've worked so hard for, this business I've built, the family that, as business owners, a lot of times there's support for multiple family members, whether it's through employment or whether it's just other support that's being provided. So you worked really hard for that. So you owe it to yourself to just, hey, let's start getting organized. Let's start seeing where we're at and make sure we're not missing any opportunities to have good success for the rest of your life.
is there a phone number they could call you, or what's the best way to reach out to you?
Yeah, I mean, absolutely. Our number's 517-783-1695. Website is just averywealth.com. Great resource. There's a lot of business owner resources on our website under the insights area. And keep in mind, as a business owner, you also have personal financial planning, business planning, personal. 3 legs of the stool. You've got personal planning, financial planning, and then business planning. There's actually the 3 legs. And so there's resources for all that kinds of stuff on our website. So reach out. There's a contact us on there as well. A lot of people do that nowadays. We'll schedule a call, just talk a little bit and see where you're at and see if we can be of help, getting you started on that journey.
That's great. And for those of you who are listening and maybe in a situation where you can't take notes or anything, you will find the information in the show notes so you can go check it out there. The other thing I would encourage you to do is, if you're not already a subscriber, to hit the follow button, because once you become a subscriber, you will be notified every time Dan drops a new episode of the podcast, and you can give it a listen. And if you're like, hadn't heard the first 2, you can go back and listen to the first 2 now. Thanks for listening to number 3. There's several more to come in this series. You don't want to miss any of them. So, do yourself a favor and subscribe. In the meantime, and until next time, I'm Bill Tucker on behalf of Dan and everybody at Avery Wealth. Thank you for taking the time to listen today, and we'll catch you next time. Thank you for listening to Ramp Up Your Retirement. Click the follow button to be notified when new episodes become available. Visit our website at www.averywealth.com or give us a call at 517-783-1695. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Avery Wealth. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. The opinions voiced in Ramp Up to Retirement with Dan Reese are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine what may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Guests on the show may not be affiliated with CWM LLC. Views and comments by guests may not be representative of CWM LLC. Investment advisory services are offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.